Hey, it's Michael Saul, but everybody calls me Tiny. This video is it time to get into Gold Plus updates and two stocks to watch. This is stock market analysis for the week of September 4th, 2017. Of course, we have a shortened week because Monday, September 4th is Labor Day and the U.S. markets are closed. So before I get into the market, just want to talk briefly about what's going on down in Houston. Absolutely terrible. For those of you who don't know, I'm originally from New York, but I've been in New Jersey the past, 20 years or whatever. This feels like more. But so I saw the devastation of Hurricane Sandy, Superstorm Sandy. Not to me personally. I mean, we lost power for 8 days, but there was not really a lot of damage to the house where I was living at the time. Just some flooding in the basement, but not a real terrible. Nothing really terrible happened as far as structural damage or anything like that. But I know plenty of people who were wiped out by it, plenty of people who are still working to rebuild. And over in Houston, it is just absolutely horrible. The only good thing I see out of it is that a lot of the bullshit you see on the media with how divided we are as a country, you see the country really coming together. For Houston, you see a lot of people helping out, and it really restores, it should really restore your faith in mankind. I mean, it's absolutely amazing to see the people come together like that. So that's all I have to say about that. I'm not one of these people that jam charities down people's throats. I think it's your own private business, what you do with charity. So on Friday, it was a light volume day heading into the weekend, the holiday weekend, but look at how we ran into Friday. 3 solid days up. We closed at basically the closing high, or all-time high, which is back here, all-time closing high. Not the closing intraday high, which would be back from August 8th. So now here's the question. With the narrow range candle after the push-up, should we look for a pullback? In my opinion, yes. I think right here is where we should watch a pullback. I'm not talking about the bear market starting from here. I'm not talking about a huge correction from here. But with the quick run-up, a lot of times this could be short-term exhaustion. Then you have the pause here. So I wouldn't be surprised if we saw a little bit of a pullback or consolidation here before they tried to make their next move higher. I think we are going to 250 here. I don't think that this is a short signal on a swing trade basis. Of course, intraday, there's plenty of long and short opportunities all throughout the day. If you are looking to get short, then you want to focus on stocks that are in a downtrend and now experiencing some strength into some resistance. So it's always a stock picker's market, right? I love when people say it's a stock picker's market. Well, it always is, because there are plenty of stocks, despite the market being in an 8-year bull market, that are good opportunities to get short. I just don't think that looking for new highs as places to initiate those shorts is always the best idea. Okay, so that's what I'm looking at now. I still think the S&P can get to 250, but I think we're short-term exhausted, which means I would not be surprised if we get a little correction here, either a pullback or a sideways consolidation, maybe catch up to these moving averages, which we ripped through here, the 20, the 50. All right, so watch that here. Of course, if we don't just get a simple correction and instead we get a little bit more, then we're still watching this previous resistance, then became support zone down here at 240 and a half basically. But for now, I don't see any reason to think that we're going to go into a prolonged downtrend from here. We're getting ready to move into the best 6 months of the year, which start in October. When is it? November. I think for Dow it's October, for the Nasdaq it's November, whatever it is. I'll talk more about that next month, or as next month approaches. I know we're already in September here. So, but for now, yeah, I wouldn't be surprised to see a pause here and then a pushback through heading to 250 at a minimum on the S&P. Here's the Dow. Okay. Lagging a little bit, but nothing to get worried about as far as relative strength goes. NASDAQ up to new highs here. Nice push out of this flag. Continue to draw these patterns, and they just continue to bust out of them and move. So nice push here. Here's the mid caps right into the 50-day moving average and a little bit of rejection there. So the mid caps and the small caps are lagging, although the small caps you see got back over the 50-day moving average. So again, below the 200-day, below this trend line, but we remounted right away. A lot of people think as soon as you break it, that's it, it's a breakout, or that's it, it's a breakdown. It's not. You have to have confirmation around those levels. And right now, it brought in responsive buying down here. We broke down through that trend line. We closed a couple of days to the 200-day. Responsive buying came in, boom. And now we're trying to push here again. So let's see if the Russell can keep it up. The Russell and the mid-caps are both lagging. But again, that in and of itself is not a reason to start shorting here. I don't see short signals here. One thing I will address, I do want to address, is a guy called me a dick on YouTube the other day in one of my older videos when I said, looking to short the next Russell bounce. And in that video, I said we can get a couple of day bounce and then we could push down. I wasn't calling for a bear market. I was just calling for lower lows. And that's exactly what we got here. We pushed up, we gapped up that the next day, we came down, we pushed to a lower low, and that was it. So it's fine. I mean, it makes that person feel important, calling me a dick and calling me, I think, effing crazy or whatever he called it. It's fine, but I just, if you want to mock me for getting it wrong, and I get it wrong plenty of times, it's called trading. Anybody who sits there, I'm never wrong, it's ridiculous, okay? But why don't you pick something I was wrong about? Plenty of opportunity for that. Look at one of the stocks that I talked about that didn't work out or whatever. All right. Anyway, enough of my yappering. Yammering? Let's go into the indices here, or the sectors, sorry. We just did the indices. See, why don't you make fun of that? Then I called it the wrong thing. All right. So the semiconductors pushed out of their triangle. They look like they want to head to new highs. Here's Clad Tanker stuck on the 50-day moving average, but it did come out of this consolidation we have been watching. All right, we're looking for a push either way. It wound up pushing out to the upside, but already into resistance, so we got to watch that. NVIDIA came out of its coil that we looked at last week. Nice push higher. See if that can get to new highs. What about Intel? Yeah, Intel's still struggling more or less just in a range. How about like an ADI? Yeah, look at ADI trying to push. Going to have a little bit of trouble with this stick here, this push here. I call it a stick even though it's a couple of days. Going to have a little bit of trouble trying to get up to there, but so this could play into, come into as some resistance. All right, let's look at stock like Maxim Integrated. Okay, it's starting to get a push here. See if it can make it up to 50. If it continues to go, we're going to need the semiconductors to stay strong here. Banks. Okay, so the banks are they're lagging a little bit. They're not really struggling because it's still above the 200-day moving average. And right now, for the most part, we've just been sideways. We did hit the high in March. So I guess since the March high, we've basically been sideways. Again, is it a short signal? Yeah, I don't see it as such. Bank of America looks okay, hung up at the 50-day. Here's JP Morgan trying to get away from its 50-day. Here's Citigroup. Again, they're not moving quick like they were a few months ago, right? They're taking their time now, but here's Bank of New York. I mean, they're not looking terrible here. And these patterns, these little consolidation patterns, if they do resolve to the upside, okay, they could be nice for it could be good for a nice little move. Here's the broker-dealer index. Not doing great. Here's Goldman. Watch the 200-day moving average there. Here's Morgan, right on the 50-day moving average. See if this is going to release one way or the other. How about the Biotechs? Yeah, Biotech's got in gear last week. Nice push up. Look at what Labu did. Really, I mean, look at this move off of 55 up to 80. I mean, and all in all, when you see, look at from down here from 150. All right, great, but we're talking now on the immediate term. This is a nice move. You got Biogen. Wow, big move on Biogen. You got Gilead. Yeah, these are big moves, and when you get moves like this, when you get impulse moves like this, you want to watch for consolidation patterns and continuation patterns. Here's this IMGM we were watching back here in the 4s. Now it went to almost $9, more than a double from, not quite, basically a double from the original entry there. So some nice looking setups. You gotta scroll through your list and look for them. All right, let's look at some of the Glamour stocks. Here's Amazon. Watch the 50-day moving average, also right just under 1,000. So you got the 50-day, then 1,000 as potential resistance points. Then you got Apple at new highs. See if it holds there or it wedges down, and see what it does from there. See if it wedges down from there and corrects. Remember, a wedge is not a reversal pattern; it's a consolidation pattern. So it could just foam up to a point and then continue to move higher there. Here's Google at the 50-day moving average. How about the Facebook? Yeah, so the Facebook, we drew this in a couple of weeks ago. Finally broke beautifully. Boom, held the bottom of this and then broke. See if it can get above 175 and continue to go. How about the Netflix? Yeah, I mean, the Netflix pulled back to the 50-day moving average. Now it's consolidating right here. Caterpillar, yeah, continuing to rock and roll. This thing has just been an ATM machine as far as the quote-unquote smokestack stocks. Right? It's not a huge mover. It's not, oh, look how big these tech stocks are moving. But Caterpillar has been solid. I try to talk about that one every week. Here's John Deere in its consolidation here. So it should move one way or the other from here. If it moves down, of course, it has to get through the 200-day to really get going. Let's look at oil. Yeah, still sloppy here. I still think oil's going back down to its 2016 lows. Still a little bit sloppy here. Bonds. Yeah, bonds came up to test its June highs, but again, could this be a potential cup and handle pattern? It could be. You got the cup, you got the handle, but it's really got to get above these highs and start moving. A lot of people are calling for a bond rally. I think when they give up on the bond rally, that's when it can hit you. And now let's talk about gold. So here's gold. I've heard this referred to as a Stein and handle pattern because of how sharp the cup part is. Instead of just being a cup, it's more looks like a stein, like a beer stein, or I guess you could drink your favorite beverage out of it. But in the end, the premise is the same. It's a potential bottoming pattern. So it had the consolidation here. It broke out. I want to see if we can get through this muck right here. There's a lot of value that built here that led to an initial move to the downside out of this. So I want to see what happens when we get back up here, specifically in the 127.5-ish area, 128 area. Looks like about the middle of this pattern, give or take, 128s, whatever. You could be exact if you throw up the Fibonacci grid, but I'd rather look at it from where a lot of the consolidation sits, more in the 128. So you got a couple points to see what it does here. What I would like to see is a pullback or pause, and then new buying coming in, continuing to throw logs on the fire and keep it moving. Right? When things get stretched like this, just like what I showed in the S&P, this is unsustainable. Okay, and it doesn't have to reverse right away, but usually what you want to see is pullbacks or pauses in order to continue to keep the fire stoked here. Then GDX. So, whoops, not GDV, GDX. Okay, so GDX. Now, I've been talking about this for weeks, that people don't get interested in gold miners until it gets over 24. That's from my friend Mike Swanson. And now we're over 24, and we're starting to move. So the big level is this high from back in February, because that's going to be the high on the year, and that's 25.71. Again, I'd like to see a consolidation or a pullback here in order for an entry. So to answer the question from the title of this, is it time to get in gold? I think it may be, but I would prefer a pullback or pause to get in, like a not safer entry, because it's such a strange word to use, but kind of like when you're getting into a tall truck and the little footstool comes out that you can step on to get in. That's what I consider a consolidation or a pullback to me. So that's what I'd be looking at for gold. All right, of course, you got stocks like Newmont, just a monster. And you could look at other stocks in the group as well. Okay, sorry about that. Got a little call. So anyway, you could pull up and look for other stocks besides Newmont. If you have a database like TC2000 or You go to stockcharts.com or a lot of the free places. So these are just the gold stocks. See what we got here. Anything sitting up? Like here's Kirkland, and this is over. This is really a sharp push up since the lows in May, over a double. So I would wait for a pause or a pullback like you see here on this. I wouldn't be looking to get in right there. Here's like Richmont Mines, nice push, maybe coming out of a base. Again, wait for a pause. Here's IM Gold, IAG. Again, sharp push up, wait for a pause. See what we got here. Here's Newmont. It's like, wow, that looks like Newmont. Yeah, that's because it's Newmont. All right, here's Barrick Gold. Here's like a Franco-Nevada Corp. Again, I'd wait for more of a pause here. This was a gorgeous consolidation here, but it can be aggravated when you're looking to try to get in there. Here's like Rand Gold. So there's some stocks to look at. Here, let's do a review from last week. That's not last week's list. Okay, this is last week's list. So you're at AVY, popped out of its consolidation here. Not up a ton from where it got out, but it is trying to get to the highs here, trying to make a move. Here is Expeditors International, pushed out. Remember, we were looking for a move either way from this triangle. It wound, or coil, it pushed up. Watch the 50-day moving average here as resistance. And Verizon is still putting something together. So two stocks to watch for this week. First one is BioDelivery Sciences. It's a cheap biotech stock. Or a low-priced biotech stock. I don't know about their spending habits, if they're really cheap, or just frugal. But anyway, they're a low-priced biotech stock. BDSI is the symbol. It's not the thickest of thieves volume-wise, but you look at this base, and you got the nice coil right at the edge of the base. Let's see if it can pop and get to $5. What's this level? Maybe a little bit. 440 first, and then see if it can get to the $5 mark. I own none of these shares. I don't own any of these shares, so I'm not looking to pump and dump you on a low-volume stock or anything like that. And the second stock, technology stock called Blucora Inc. BCOR. Again, I own none of these shares, so I'm not looking to pump and dump, anything like that. Front run, or any of this is what the super guru used to like to do. So, see here, nice coil. Looks like a triangle, but a little too tight here, not really big swings. You call it a triangle or a coil, but really nice uptrend. $10 the end of last year, up to 24. See if it can pop out, head to the 25 number, and then above that, 26.35 is next resistance. So those are the two stocks to watch this week. Any questions? Tiny@attackthemarkets.com. Don't forget, give me a thumbs up on this video so it moves up the rankings. Leave a comment below, and I will talk to you either in the intra-week updates or in next week's video. Have a great trading week.